Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Thursday, August the 22nd, 2024. We got our answers today, at least on our near-term basis. So trying to keep with the new habit of how I want to and what I'm going to cover, I'm going to focus on the trading. There were different things that took place, but more than ever, the market gave us a pretty clean sign of likely what's complete up to this point and what we can now hopefully expect to unfold over tomorrow and maybe into next week. And so here, starting with the S&P, I'm on the 1-hour chart. I believe what happened today, the market did go up. The market did move to a new high. It got up to 56.65. And that actually was a resistance level, albeit on the lower end of what I thought, because it was 0.618. But it came in, hit it right on the nose, and rejected. And in that process of rejecting, and in my view, what I saw starting to happen, I believe, was the risk off. And it could be just in preparation for tomorrow's expiration. There were many factors. More importantly, what did take place was levels. There was a space up there, so it became more difficult to sustain one side or the other. So I believe that what kind of happened is it just drifted lower, which started to trigger things coming down. And so we saw some larger periods of just a shift in volatility, a shift in the options flow, a shift in the capital flow. And it was revealing in terms of our Elliott, because number one, it came down and broke a very high level wave one within a final move. And outside of that, it also then broke a wave one all the way down, which took it up a degree. So I do believe today that we finished the minuet wave 5 and the minute wave 3, and that's under the preferred count. If you remember, preferred count suggests that the minor 4 is in at the August 5th lows. So we're off and running within the minor 5th wave. Now, flip side, the alternate view remains also the same, where there's a strong possibility that if this is ABC for minute wave A, ABC for minute wave B, then we have completed it. Because this would drop down and not be a minute degree, but this would drop down to a minuet degree A, a minuet degree B, and then we still get the 5 waves up for the C wave. So we can easily count it saying as complete as minute wave B of minor wave 4, and the decline will be much stronger from here. And likely will shift again the positive gamma to a negative gamma atmosphere, which is risk on, risk off. So if we just kind of bear that in mind, and with risk off, what are they doing? Getting out of those positions that were just put on as we did this. So this is risk off. Then we start to see it to build. Then we get a little tail end here, and then they just built it. So I think this initial is getting out of some of what all of this is. And again, tomorrow's an expiration. And then we're going into the final week of August, but we're also then heading a little bit closer. Tomorrow also is Jerome Powell speaking at Jackson Hole. So let's just take for a minute. Jerome Powell is speaking. No decisions be made. Is not expected until the September, I believe it's the 16th or 18th, somewhere in there, excuse me, is the next Fed meeting. And that's the magic one where they're all expecting to hear the golden words. We are lowering the rate, reducing the rate. You know, the range, which I think about right now is 5.25, 5.5, somewhere up in there. Maybe that'll come down. If they do it a quarter point, it's going to be 5 to 5.25. So it's like, oh, woo, 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 right? Okay. So again, as things begin, they're going to be hanging their hat on what hints he may give tomorrow as he speaks at the audience of this economic summit in Jackson Hole, Wyoming. And so I would expect we're going to get something either way. Now, I'm not sure exactly when. Let me just double check. I'm sure they've got it marked when he is intending to start talking. And that would be on here. I have it at 10 a.m. Eastern. So 10 a.m. Eastern, I guess, Jerome Powell. So not bad. We don't have all that long to wait. Now, based on where we are, if I'm going to come up and I'm going to say just we are putting in an ABC, our first line of defense would be this area right here. So I kind of want to open this up. And again, you can see that area has already been, topside's been touched. So, but internally, what we'd like to see or need to see is an ABC. Now, that could come in the form of 1, 2, 3, and as in other words, so both. Now, I want to open this up because I want to look inside, and I actually want to take it off of candles, put it back on bars. I trade candles, but when I'm trying to analyze, I take them off and put it on the bar. So what I can say, what this appears to be, see, this would have to kind of be an AB, could be an ABC, but 1, 2, yeah, see, it gets hard in here. So we're gonna have to let it go a little bit longer, but I could be the A wave. Then we do a quick B and we come back down into C. And this all can take place tomorrow. And if we get down to there, turn and start to move higher again. And to finish that larger move. So once again, coming back out to here, what if this is just a minor 4 and we need to go up and finish minor 5? So that would suggest we do a minute 4, which we're in right now, and then turn and do a minute wave 5 up. And I'm going to say that what we're waiting for, what I would need to see, like here we have, these were all for the 3rd, which, by the way, I need to take off because we're already there. All right, I do believe we finished that. So this would not be for that level. So let me take, wrong one. So those need to come off. Do it this way. Remove, and this would be for the minor 5. So we leave that in. So in a target, just a sort of a bland one target would be for the minor 5th wave, if that's what we're filling in here. And that would come at about 5,800. So yep, there's our possibility once this 4 is over under the preferred that we'd come up here. And that then once we're there, and we actually could go above, if it really got carried away, and trust me, I'm going to go on the basis that, yep, there's going to be plenty of news to fill in any blank in anybody's mind that the market's doing the correct thing, and here's why. But I'm going more on the basis of the way that things are trading and what a trader's looking, what a trader can see, and what propels these moves. And it's just a shift. Again, it's just, in my mind, it's a shift in capital. It's a shift in options and how the options are trading, and how then ETFs trade, and how the index then trades, and what the flavor of the day or the month or whatever is. There are periods of time when we saw already, when the risk on, they were moving stuff back into Apple. Then you saw that they're moving stuff into NVIDIA. You see the volume pick up. You see the options start to trade. And the trade is, it's like they're buying the calls and they're selling the puts. So the dealer has to, sell the calls and buy the put. So, and what does that do? Gets them pretty short. So they go and they buy the underlying, they buy the stock, or they buy the index or the ETF. So all of those things put together can create our moves, and these flows then get measured out via gamma. And so we discuss and talk about, is it a positive gamma or a negative gamma atmosphere? And right now, it's still, I'm sure, a positive gamma atmosphere because a lot went on. But if it continues to decline, which I'm expecting, there are going to be additional points that break that would suggest that we don't stop into here, because that's initially on an Elliott basis, that's what we're looking for. We're kind of looking for the market to kind of come right into here. This is the area of the previous fourth wave of 1 lesser degree. But that fits Fibonacci-wise? Yeah, it does, because here's 0.236. It's a little bit below, so it's between the two. Most common is here, so that would equal 5480. And then we have the 50% retracement of this move from that low to that high. 50% retracement is 5423. All of them are acceptable levels as long as we'll be able to see an ABC. So being that I think this might be A, we get a little bit of a B, and then we come back down into C, I would suspect that we're going to actually break that and likely end up closer to here. If I had to draw in a no, do not penetrate zone or a zone on my chart that would basically, let me just see if I can get this all straight. All right, so this actually is 53.59, and this is, you know what I do? I go like this. 53.59, good. And the endpoint, nope, should be 53.59. 53.59. So now it's straight across. So that red line would be where this, if this is a minute wave 4, where it would cross minute wave 1 and invalidate. Then it is going to be left as an ABCB, and we are going to be heading down below here. But yes, we actually need to let it come out that low. We're going to get stronger hints if it starts to break 54. 54.23, we're getting a little bit of a stronger hint that it's like something bigger. Plus, we'll be able to see the structure itself. But there, it would be a C wave. So we'd be looking for 5 down to take care of the C wave. And I would put up probably likely additional fibs that would go along with a C wave down. And that kind of would come from, let me go out. 4 hours should do the trick. And I'm going to open this up, and we're looking for the C wave, right? So we go to the top of where the A wave started, go to the bottom of the A wave, and go back up to there at 1.618. That's usually the kind of thing, but 100% is 50, 64. That definitely would fit. And that is also most common. So the C wave to equal the A wave, equality, because it's almost pretty flat, to be honest with you. And hey, I'm on a 4-hour chart that's like, well, are you so sure? It's like, kind of, I am on this particular count. But again, if this is a minute 4, then we're not going to get all the way down and break this. But again, the B wave, yep, we should. And it could happen quickly. So both you can see on the 4-hour why both are very much still alive. We have this, we have another level here, and we got to be able to see the structure. So let's see how this unfolds. Moving averages, 4-hour chart. Let me go up one. Let's go look at the daily, and also go look at the pattern on the daily. So you can see, this is the one I'll go over, and I'll put it back on the candle. You can see the candle. It's pretty big, kind of engulfing. It basically almost engulfed the previous 3 days. And that's how it broke. And it broke below 1. So it takes out the whole thing and brings us down into here. But moving averages, they're actually just starting to crest on the daily. But flat, like I suggested, 20, wanting to go flat. This will go flat, another stronger down day, they both will turn. And it won't take very much to get the 20 below the 50, which will just set us back into a little bit stronger downward pull. All right. So that is the S&P. Let's go over and take a look at the NASDAQ. Same factors, okay? And here let me go. Actually, we'll just look at since I'm right here, I'm going to look at the moving averages. Remember, this is the one that it was the NASDAQ. It was like, boy, these moving averages never really got themselves all in proper alignment. So how easy it's going to be to line them back up to go down, because still got a ways to go. But here's the 13 and it's cresting and it closed, or the low sits right on top of it. Any additional weakness, it's going to throw that this way, and the 20 will crest and return and start to drop as well. But that still could just suggest we get a little bit bigger of a couple more bars down into here, at least one. But that would include that we rise up in a little bit of a B wave, we come back down in a C wave. All can happen tomorrow. We could finish a minute wave 4 and go. Just saying, that could happen. But what we're getting advance notice of the continuation and the downside. It'll be worth playing in all the various ways that we can take advantage of it. All right, that's the daily. I'm going to bring this down to the hourly chart. And again, we'll take a look to see what actually, here was the weakness. And let me go back out and change this back over to the bar, because it becomes much clearer to actually see. And everything kind of followed through. That rejection off of the high, which also met resistance, actually went above it, because our resistance was 20,014. Excuse me. Then it went to 20,015 was the high. 20,025 was the high. And the downside did break below the wave 1, so they made sure that this was complete, which put that 5 up here. And that 5 then completed the minute wave 3. So as the preferred count still shows, the minor force here, and now the minute third wave out of minor 5 is complete, and we're looking for that 4th. Initially, it did come down into the zone. In fact, I was thinking, are you going to go down and meet the zone? And of course, it got pretty low, and then it stopped and just went out and closed. So additional weakness will push it to where we're here. So our range initially was there. And I did mention that it could go fast. So when we look at the whole move, the index itself was down, well, closed down 297. It was lower. And from the high, so the whole turn was a lot more. High to low was a lot more. So you got 20,025, and your low was 19,542. So high to low, over 400. So it was a good turn, and a solid rejection, and pushed this to completion. Now, what's the other side? Oh, so to finish this, okay, sorry about that. To finish this, the additional line, as I put in on the S&P, and let me just catch this. This is 558.50. Go right there, edit, and we're going to, oops. All right, there we go. All in line now. That's the do not cross line if we're getting this minute 4, right? Because minute 4 cannot cross over and enter into the price territory of minute wave 1. So that would be a break zone. If it breaks, then this turns back into, this moves to a minute A wave. This would then be minute wave B of minor 4, and we'd be looking for continued decline to go beyond 17,351. Doesn't have to be all that much, but it would go beyond as we've put in a C wave. So this whole structure, instead of being ABC, which we'd look for in a wave 4, but if it's going to be a C wave down, then it's going to be 1, 2, 3, 4, 5. And we'll be able to measure it out. We'll get fibs to cover where can we end up. But right off the bat, you're looking at least 17,351. But we're going to take it. I'm not saying that's what's going to happen. There's too many other things going on here. So, but I am calling it to one, the preferred and the alternate, which actually I hate to even give each one their own title. They're equal. of equal. The market is going to let us know, just like it did. So I have no reason to go outside of this and for trading, because there's plenty to do right here, plenty to do. And these moves were nice. They were P&L giving. All right, so moving averages on the hourly chart. The 20 crossed the 50. We got an extra boost. And when it was happening, if I'll show you on the 15-minute chart, when it was happening, it was pretty good. That was very good. That was very good. This was very good. This was okay. This was really good. And then you stop because it's like, well, okay, we're getting pretty close, getting into the close. And, you know, it either was going to break down below 40 or 40 would hold and they would start to just bring it back up. And that's pretty much what happened. You could have continued to trade and it would have been profitable depending on your actual style. But it was a good trading day, I will say that. And less pressure on trying to wrap a narrative around what was going on by just following the options flows, the capital flow, and the gamma. And where knowing that the risk on trade was likely going to start to unwind a little bit. And that's what I think we're seeing. And again, tomorrow's expiration, and it could have something to do with that. Absolutely can have something to do with that. Because options expire. And in the ETFs and in the indexes, it settles into cash. So the Qs, the spiders, the diamonds, IWM, they all settle into cash. So capital flows. And so, and then the options and those strikes will affect the gamma and where the gamma flows go. And so as we start to unwind in this tomorrow's expiration, which is just a weekly, it could be big. Again, I didn't really take a look to see what the gamma levels were, but I can tell by the signals and the levels that the signals are on which are bigger than others. And so today it kind of slid through some of the larger gamma levels that should have held, should the market then wanted to continue to go to the upside. But when they start to break, we're getting a shift. We're getting a shift in position. We're getting a shift in the capital. We're getting a shift in gamma. Follow the leader, which is basically the money. Okay, so for tomorrow, we might get a B wave and then a continuation. So we're still looking for it to be more of an ABC. Now, looking here on the 15-minute chart, 1, 2, 3, that could be a 4, and then we get a 5 all the way down. And it's not the prettiest, but you can pretty much put it together. You could look at it on a line chart as well. There's the high. Right, yeah, see, 1, 2, 3, 4, 5. Not the prettiest, but then again, you will see them, but this is more like how the markets actually trade. They're not as pretty as the lines that are driven and made in the guidebooks. All right, going back out to that hourly chart for tomorrow now. What we got Jerome. Jerome will be talking, and that starts at 10 a.m. And then also at 10 a.m., just probably before he begins, we will find out new home sales. All right, so I got a very good, thank you, Reed, by the way, gave me a very good idea in terms of making a separate video, which I hope to do tomorrow, which is going to detail more the trade room. I think it's really been great. And for example, even today, not that it's a rule, but I always tell people, it's like, if you have a goal on your day and you meet that goal in the first 15 or 20 minutes, wow, you're done, because you get to come back and do it again tomorrow. And so if your goal is X amount per day and X amount per week, then when you meet your goal, you go out and have the balance of the day is yours. So I'm leaving that out there. But today, again, in the trade room, the members that were there were all done before we were at the top of the hour. So the market opens at 9:30. They were all done by 10 prior, and one often had really great days. So again, I want to detail that a little bit more. And again, we're set up for day traders. And so if you've had a thought about being it or whatever, I am going to try to put together a clean video, which is me and charts, and talking about what we're looking at. All right. So look for that. Also, the weekly update will be coming out maybe tomorrow, maybe on Saturday. We'll see. But the latest should be Saturday. Have a great weekend, everybody. Have a great trading day tomorrow.